The Reserve Bank of India has hiked its key interest rate, the repo rate, by 0.25%. The move now raises interest rates to 6.5%. The latest increase is the 6th consecutive rate hike. In all, the RBI has raised the benchmark rate by 2.5% since May last year as it looks to control inflation. In 10 of the 12 months last year, inflation stayed stubbornly above the higher end of the central bank's target of 2 to 6%. The central bank's mandatory report to the government explained why it could not meet inflation target for most months last year.
Based on an assessment of the macroeconomic situation and its outlook, the MPC decided by a majority of 4 members out of 6 to increase the policy repo rate by 25 basis points to 6.5% with immediate effect. Consequently, the standing deposit facility, that is SDF rate, will stand revised to 6.25%, and the marginal standing facility, that is the MSF rate, and the bank rate to 6.75%.
So what does the RBI rate hike mean? Indian banks are certain to pass on the latest RBI rate hike to customers almost immediately, as seen in recent months. That will make loans costlier and lead to higher equated monthly installments or EMIs. All consumer loans have become costlier over the past year. Indian households continue to be under pressure from mounting interest and rising EMIs, even as they struggle to manage their monthly budgets from rising prices of almost everything. The series of relatively large RBI rate hikes has sparked concerns that the battle against inflation could risk curbing economic growth as well. That view has already forced several top institutions, including the RBI, to downgrade their India GDP growth forecasts for 2023-2024. But RBI governor said the Indian economy continues to remain resilient and is seen as a bright spot in a gloomy world. He also warned inflation is likely to remain above the central bank's target of 4% this year, and as such, caution is needed. Still, slowing growth concerns have driven expectations that the RBI's hands will be forced to pause rate hikes at some point soon. A Reuters poll taken before Wednesday's decision showed post the latest hike, India's central bank will pause on interest rates. And for more on this, we are now being joined by Madan Sabnavis, Chief Economist at Bank of Baroda. Mr. Sabnavis is a member of SEBI's CDAC and RAC committee. Thank you very much, sir, for joining us at this hour. I'm going to start by asking you, most analysts had expected the hike on Wednesday to be the final increase in the RBI's current tightening cycle. What will be impacted the most in the short term? Some analysts say loans will be affected. What's your take on this?
See, what we have seen is that when the RBI has been increasing rates consistently during the course of the year, there has been an increase in both your term deposit rates as well as the lending rates. So if you look at the deposit rates, for example, I think the RBI has mentioned in its statement that the 225 basis points increase in the repo rate has actually led to fresh increasing by around 213 basis points. It is almost a one-to-one correspondence, which is there in terms of deposit rates, which means that savers have definitely benefited from the higher repo rate. On the other hand, we have seen, as far as the lending rates are concerned, there are two kinds of lending rates in the country. We have several loans, especially in the retail segment, as well as the small and medium enterprises, where the rates are fixed to an external benchmark, which has been fixed normally as the repo rate, which means that once the lending rate is juxtaposed with the external benchmark, which is the repo rate, there is an automatic transmission which takes place. So therefore, if I am a home buyer and I've taken a home loan from a bank, I would automatically be paying 25 basis points more as my overall cost of servicing my debt. However, if you're a larger company, you're normally driven by the MCLR, which is the marginal cost lending rate, which is more sticky because it's formula driven, and the correspondence between your increase in your repo rate and the MCLR is much smaller. So probably your 25 basis points may increase to maybe something like 5 or 6 basis points. So probably the larger borrowers are linked to the MCLRs will be insulated from this increase, whereas the smaller borrowers, as well as the retail borrowers, would definitely see 100% transmission.
Mr. Madan, let me ask you this. The global economic outlook does not look as grim now as it did a few months ago. What is your assessment on the growth prospects in major economies, bearing in mind inflation concerns? Some analysts say the situation remains fluid and uncertain.
So if you look at the global scenario, there's definitely some improvement which has taken place in terms of the outlook. It was earlier felt there will be a hard landing and there will be a deep-rooted recession with growth rates going into the negative region. But today, actually, we're talking of all the major economies, starting with the US and going through UK and probably a number of the European economies. We're really still talking of a low positive number in terms of overall growth. So I think that the case is definitely not as severe as what it was made out when there were first talks of recession. So I think there has been some internal processes which have ensured that growth will still remain just about above this 0%. And that's probably good news for everyone. On the other hand, if you look at the Indian economy, for example, India is basically a domestic-oriented economy. We are not that export-oriented, even though we are trying to push forward our exports. So any kind of a slowdown in terms of the global economy will definitely affect our exports. To that extent, I think our external, the balance of payment situation would be under pressure. But if you look at the overall growth impulses, they come from within the economy. And that's why I think even the RBI has gotten it right when it's still expecting growth of around 6.4% for the next financial year. Suppose these numbers with what the IMF and the World Bank are talking of, I think we're still talking of a growth rate of about 6% for India at the time when the global economy may be growing at around 1.5%, not more than 2%.
All right, I've been talking to Chief Economist at Bank of Baroda, Madan Sabnavis. Madan, thank you for talking to WION today.
Thank you.
WION is now available in your country. Download the app now and get all the news on the move.